Today, folks, I need to share with you the 3 stocks that saved me from absolutely getting devastated this year as we head into one of the most tumultuous weeks many of us investors have experienced in a very long time, thanks to geopolitical events, which I'm going to argue are going to be greatly benefiting the West. And I'm going to explain to you why. We have one of the most pivotal earnings seasons with these big tech giants posting this week that you need to pay attention to because it's going to move the broader indices. And then finally, the interest raising environment continues. The Bank of Canada is going to be raising the interest rate again this week. The US, I mean, lots of stuff to pay attention to. And if this is a conversation you can appreciate, in return, I simply ask that you hit that like button because damn it, when I rolled out of bed this morning and I saw that my accounts were green, I was pretty giddy thinking that, hey, this is going to be a pretty good week. I'm hopeful for earnings. I'm always going to be an optimist, a glass half full kind of a guy because that's how I made the fortune I've made thus far. And I've noticed the negative Nancy's out there have always underperformed the market. But damn it, when I was scrolling through outside of things like Shopify and Tesla getting hit, it was even worse for the Chinese stocks. I mean, BABA, Charlie Munger, Warren Buffett's partner in crime, the guy that was pumping BABA to the moon, seeing BABA to new lows. I was so bullish on BABA because I felt like it was kind of cushioned against the geopolitical stuff. Turns out it's not. It's down 15% today. NEO, anything related to China, just getting absolutely wrecked. JD down 14%, PDD down 20%. It's just really bad. And a lot of it is all related to Xi Jinping. The Chinese tech stocks tumble in U.S. trading as Xi bolsters political power for his 3rd term, which apparently after 2 terms, it's just kind of tradition that they step down. But he did not. He's kind of following up this 3rd term as party leader. As new data showed, the country's economy fell well short of Beijing's growth targets because the real estate market is getting devastated, guys. They will not accept foreign vaccines. The vaccines they have don't work, so they have a zero, pandemic policy right now, and it's just making people flood out of these Chinese stocks. And I'm going to tell you that I think this is only going to benefit us considering you have Europe in these tumultuous times, the geopolitical events between Russia and the Ukraine. And why am I saying that benefits us? A lot of people are like, a lot of my guys that are in the army, I have some friends that are dealing with some of the Taiwan and China stuff right now, and they're saying that their tensions have never been so damn high. But this causes money to flee these countries. And where does that money go? Into the place of most security, guys. And the place of most security is the US dollar and the US markets. Even though the US markets are getting hit, the dollar has rallied so insanely because of the bond rates, the GICs, and everyone just investing their money into the USD. And that's what we're seeing happen this year. And it's a trend that I think is going to continue. As I always say, the trend is your friend. So be so damn blessed that you live in a place like the West here, folks. But putting that aside, the earnings this week are going to be insane. Tomorrow we get UPS, which will dictate what Amazon does the same way Snapchat dictated what Meta and Google did. Meta and Google dropped wickedly in after hours after Snap dropped like 20% on bad revenue. But we got GM, Coca-Cola, a lot of the dividend stocks like 3M, Raytheon Technologies tomorrow morning. After the close, Microsoft, Google, really big ones that I'm going to be watching there, guys. Visa, some fun ones. Wednesday, we're going to get Meta. In the morning, Boeing, Waste Management. We also got Teladoc after close on Wednesday. Shopify is one that I'm going to be closely paying attention to. You got McDonald's, Caterpillar, MasterCard, Altria Group, a lot of the dividend favorites and some growth in there. And then finally, the biggest of the bunch, you're going to get Apple and Amazon on Thursday close. But I'd also watch the oil giants on Friday. They have been what have generally been holding up a lot of the indices this year with ExxonMobil, Chevron. We're also going to get some of the favorited dividend stocks in the healthcare industry like AbbVie, Pfizer, etc. But again, pay attention to those earnings, guys, because it's going to be a wild week. And outside of that, the interest raising environment continues. If you have, a variable rate mortgage, you are definitely going to continue feeling the pain. As basically on October 26th, we're going to get another Bank of Canada meeting, and they're expected to raise the overnight interest rate by 0.5 to 0.75%. As my corporate advisor told me to wait on buying GICs here because they think I'm going to get a better rate at the end of the month. So just things to pay attention to. But what has been keeping me alive through this tumultuous insanity, guys, are these dividend-focused ETFs, not individual dividend stocks like many of the dividend community might want to bolster, but I can't get over when I was calculating the returns this year from like the Schwab US Dividend Equity ETF, which is down 12%, but you tap on the over 3% yield and you're down under 10% for the year. This has actually been outperforming most of the markets, and this one holds those incredible companies like Merck & Company, Amgen, IBM, Pepsi, Pfizer, Lockheed Martin, Texas Instruments, Cisco. And if we take a look at the long chart here, here, guys, over the last 5 years, this thing has just been crushing it, which kind of blew my mind because I kind of bought these in a passive sense. Same thing with the Vanguard high dividend yield ETF, which is down only 9%. Tap on that over 3% yield, and you're really only going to be down, if the market stays flat for the rest of the year in these ETFs, you're really only going to be down about 6% on this guy. And this one holds, again, those fabulous companies like Johnson & Johnson, ExxonMobil, JP Morgan, Procter & Gamble, Home Depot, Chevron, Eli Lilly, Pfizer, AbbVie, Pepsi, a lot of overlapping companies here. But, when I made that pivot at the first and second quarter to buy these ETFs, I didn't realize how truly resilient they were going to be. And one of the true places of solidarity where the markets weren't as overvalued was in the Canadian markets. I mean, VDY, this company that I just been driving money into left, right, and center. I bought a lot of it last week. I think I dumped like another 10,000 in this one alone, along with the S&P 500 index. This company, guys, though down 5.68% just on the year to date, you pop on the over 4% yield and you're almost flat for this entire year. Find me investments outside of the US dollar that are generally flat since the beginning of the year. They're like non-existent. And again, this one having broad exposure to the banks, which the banks have largely been trading down, but giving you some good exposure to energy because, again, the Canadian market's primarily made up of energy and banks, has been a true place of just honest solidarity. And I know I've been pumping these ETFs quite a bit, but again, guys, I've been doing this for several years. A lot of people call me out all the time, but damn it, I have made some really prudently good decisions where I didn't have to sell out of the entire market, unlike Meet Kevin and many of the investors out there that, led you astray, led you into all this speculative insanity. And don't get me wrong, man, Alibaba, Facebook, I made some great mistakes, but made some mild pivots here and went into the more passive side of things. And it has really offered my portfolio a lot of cushioning to the downside. And I'm just going to be very intrigued to see what happens after this week once we get through these earnings. And I'll keep you guys posted, but I'd love to know what you think, as I'm going to be talking about tomorrow, more or less utility stocks. So many of you guys have been intrigued by, these really awesome dividend stocks, whether it's REITs, utilities, and I talked about REITs, but I really want to dive down into the other sectors that you've been asking me questions about, and I'm going to answer those questions for you because I do think utilities are another place of really great solidarity. But stay cool, stay awesome, and as always, I look forward to catching you in the next one.